Hi there, traders, and welcome to Trade the Structure, the morning Jumpstart Macro View. So it's now Monday morning, just ahead of or in Australia, just ahead of the Asian session. So I'm just going to recap what happened overnight in the US. Okay, so where that led us into the weekend. Now, there's a lot of bargain hunting on Friday. There was some good buying into the ASX as well. From the open, sort of into that major support. We've got the ASX on the screen now. This is the 30-minute chart. Now it's pushed through a key level at around 69.20, say, just below 6,900, flush through there, and then it's gradually bought its way back up again. So the level today to see if it can get through is 70.40. Now, this, it could do one or two things. I like the fact that it's actually pushed back above that level. It's not retesting it like here, retesting from underneath and then failing. You tend to big flush down like that and a bit of a bounce back above the level. You tend to find things like this happen. Okay, and then it's working its way back up again. And now that's going to be a squeeze because there's a lot of shorts built up on the indices, on your CFDs, anything like that, futures market. That could easily get squeezed out and you're going to get some bargain hunting, I would expect, with this market today. Whether it just flushes down and starts to hold and then rebounces, or straight from the open we find a bit of a bounce, and that's probably going to happen because the US was up nice and green on Friday. So you'd expect some bargain hunting today. But just to see how it goes. Now, the longer term MACD is starting to roll up. It's extended to the downside, and that's obviously when you see these sort of moves down, you know that there's going to be some sort of extension. You know that the market needs to squeeze out some shorts before it can re-establish. So if it wants to re-establish on a short side, then it needs to squeeze some out. Okay, put some traders back on the sidelines, re-establish a lower high, and then you can sell into that. For now, it looks like we're sort of in an extended market. So that's the ASX, expecting some bargain hunting on the open. Now we get over to the US. Bit of a strange session. You saw this, like I said, the 30-minute chart. It was around 6 a.m. It just took off. Okay, and it was getting hit before that as well. So it was, for me, mainly bargain hunting in the US. Now, we spoke about this level the last few sessions. You've seen this big level down here that's extended into, and that was an extended market. You've got earnings in the US coming out, sort of, some doing really well, some are doing not so well. So I guess it's just mixed like usual. But there is, because it's well extended into that's 42.52. This is on the big S&P, extended into 11. It's the same sort of on the Dow and the Nasdaq. They've been hit kind of hard because with this new interest rate rising cycle that they've got to deal with, everyone's trying to pick a bottom, I guess, and just trying to see what's happening, especially with earnings coming out. See how they attack it. It's still, with bond yields, as bond yields go up, it's more attractive to big funds and stuff to start loading up into bonds if they're thinking the yields are going to continue to go up over time because of inflation and interest rate rises. But still, for now, there's a lot of people still expecting that it's kind of attractive on sort of the share market, on the indices down here. So they're happy to load up long, and it was mainly supported again, by tech stocks. Okay, so there was some big buying into the Nasdaq that was up. You'll see 3.2% showing. So the Dow was lagged quite a bit, up 1.65. So that would have just been buying into that, ETFs buying everything. All that sort of stuff. But the S&P, you can see, was driven higher largely by just tech, a rally in tech. We still got this level here, which is a big concern. So for me, I'm still looking at this rising channel. It's broken down out of that channel. So I'm not going to get too excitable about it because had a good day on Friday. It doesn't mean anything. We can get smashed tonight and be straight back down again. Okay, so we've got this level up here at 44.56 on the S&P, which has got to contend with. Now, if it can jam up through that, fine. I wouldn't be surprised if we sort of get up through there and then we start to hold something like that. If there's going to be more negativity, or we just start to grind back into this range and start attacking some of these highs. Okay, the Dow, let's go over to the Dow. Same sort of scenario. It's flushed down to a major support zone. And this is what we're talking about in the ASX, flushing through, bouncing back and see if it can hold above, which the Dow did, held above, and the S&P did as well. But it's into a zone around that 34.750, 800 level, which is just recent highs from, what was it, 27th of Jan or thereabouts, 28th of Jan, that it's going to contend with. So it's been here before and it's failed before. It's just come off this high low though, okay? So first time, big flush down, tried to bounce, tried to get through, couldn't, down, tried again, down a bit deeper and trying again. So I would not be surprised if we see a couple of sessions of some more bargain hunting. We get something like that maybe, and then, a top. That's just what I'm thinking at the moment, because I still think that the market's going to struggle a bit more, okay, with regards to interest rates and dealing with interest rates. Now the Nasdaq, same sort of scenario, just buying, bargain hunting off those lows, right? So that's all I'm really seeing at the moment. And it's just how far up we can go. Can we take out this level 14,700 or 650 through here? we take that out, get a bit higher, or are we going to fail from here? Who knows? We just have to wait and see. So that was US. Now the DAX and the UK, the FTSE have lagged. They were down. They were they closed well earlier than what we saw. So the market was under a bit of pressure through the European session, had a bit of a bounce into the close because the US wasn't too bad, but the US it opened negative, okay, and bounced back. And it even got hit pretty hard around the 5 o'clock mark, and then say 6:30, bang, up she again into the close. So you can see it was well and truly, it's a manipulated market. ETFs, algos are ramping it for funds, whatever, but it ended well in the green. It was just bargain hunting, like I said. So I would expect the DAX and the FTSE to play catch up when they open later tonight. We've got the DAX. It's got a couple of levels, so it's had a high here, popped up, flushed it, and headed straight down, but flushed that low. So it's a choppy, uncertain market. I wouldn't be surprised if we're going to open up in the green. There's going to be some bargain hunting on the open. In the European markets, playing catch up with what happened in the US closed, but whether we come back up to test 15,507, these highs up here, or whether we build a lower high and pressure down. So if we get all the way back up here, then you're going to be looking for a pullback. What happens on the first pullback? If you start to fail a bit earlier, then I'm looking at that as a lower high, okay? And then some continuation potentially into that support zone, that major support zone. Okay, the UK, this is a FTSE. Now they've come off this support zone here. They still, this is what we spoke about before, holding here, and it did. That's the uptrend. That was just a nice little trend line, bounced off that trend line, headed back up into the highs here at around 76.10. These highs through here, failed off that. It's come straight back down, retested off an inside level here at around 74.15, thereabouts, 74.10. So it's just whether it can, continue on with that positivity and bounce off here and continue its way up through this level to the top end of that channel or that range, back up to this level, 76.10, like I was saying, or whether it just gets that lower high. We might obviously positive open, whether it starts to do something like this. Okay, that's not something you really want to see because that could take out this level through 72.85. Okay, if that gets that kind of price action. Now, actually, I would look at the dollar index, the US dollar. US dollar is looking a bit top heavy at the moment for me. We can see this longer term momentum starting to roll over. Doesn't mean it's going to fall. It could completely go sideways. It's going to have support from interest rate rises, and being the only currency really that's going to be looking at interest rate rises. Don't worry about the euro, the Aussie. They're all holding back, but the US is already talking up inflation and interest rate rises. So that's sort of the favoured currencies against the others. So it could find enough support just to hold and go sideways. Now, if we start to roll over from here, the first level is looking into that maybe 97, 96, 90, this zone just through here, whether it can sort of flush into there and then bounce back just to squeeze out some of these buyers through here, okay? Or like I said, it could go a bit deeper. We don't know just yet. We just have to wait and see. But it is, to me, looking a bit top heavy. You get this nice trend up, bit of a pullback, flush up into new highs, and then failure. And we failed straight down through this level. And remember, this is only the 30-minute chart. So where this could be a lower high, we get a deeper correction before we find some buys again. If you're thinking it's factored in the rate rises, then it's probably, like I said, it's a bit overcooked. Whether it's factored in 4 rate rises for this year, the US dollar, or whether it's going to be a bit of a trend on. So, but either way, if you're buying that, and if you do think it's going to go higher, you don't really want to buy in an extended market. You probably want to buy a pullback, support a pullback, get a better price, and then see how it goes. So if that's looking heavy, then you might find that the euro is going to find a bit of love. And it's already looking like that. We've had this big push down, longer term momentum starting to rally, starting to push up. If we do get a bit of pullback, longer term momentum sticks nicely. If we go sideways here and start to, we can't get through these lows, we can't get through sort of this zone through here, then expect a bit of a flush high just to squeeze out some of these shorts. And it's probably the same in the pound. The pound's got a lot of shorts built up here. Potentially, if we get a rally into the US dollar, a fall in the US dollar, you need a pound, some sort of pound buying, and see if we can hold off this level here at 133.68. Now the Aussie, much the same. A lot of shorts built up, a lot of shorts stacked up, and we're into a support zone. We're into a level around that, say, 70 cents, 69, 90, thereabouts. This zone here, it's flushed. It looks like it's going to bounce back up into the region, but we'll just wait and see. Okay, this is this low from the 4th of December. All right, so it's flushed that low. It's extended. You don't really want to be selling into that extended market. The market will do it time and time again. We'll flush a level, trap some shorts, shorts, short sellers, and then squeeze them back out on a nice little rally. But your level to be, it's holding down the action at the moment is somewhere around here, around at 70.43 area. Okay, so we can easily, remain in a downtrend, pop up to here, and then go down. And there's no reason why we can't squeeze it, because that leg down hasn't been broken. We're finding a higher low can pressure up, but that anchor doesn't break to the downside, then the shorts could re-establish to for a move down. I guess it's just dependent on what's going to happen with the US dollar, which I feel is going to be supported. So I'm sort of favoring something like that. So I wouldn't be selling in here, be tentatively buying, nice little setups if we get some pops and just see what happens. US dollar, so US yen. Again, that's showing signs it's getting a bit overextended, good run up. We need to correct, maybe some of that level, have a bit of a correction off here. I'm potentially looking for a flush up here and then failure. Okay, as simple as that. Just see how that plays out. Gold's a favorite. I think gold, I was looking for this, more of an extension into this zone, just this longer term trend line up. That's more from the daily charts. Trend up, so squeezing in with holding lower highs and higher lows. Wouldn't be surprised if we get more of a flush into this 1770 area and then find some buying. But if we find it here, you'd be looking for you want to see, if you want to get long, you want to see sort of what happens in this first spike. We'll take out that level. If we get something like this, I'll be looking for that. Okay, something off a higher low, not just a spike and then we roll over, because you can easily spike here. If you buy straight into that level, we can get the lower high pressure back down again. So you just want some higher lows on the lower time frame to give you a nice risk reward entry. Okay, but we'll see. I am looking for some sort of buy on gold. I'm looking for that longer term momentum starting to roll up. It's run out of steam on the downside. Okay, maybe the shorts are taking a breather. We need to flush some shorts out, flush some sellers out. So whether it's going to be a short term buy and then rolls again or not, we'll have to wait and see. Okay, crude oil. This is this daily level through 85. It's popped up above, but that's choppy price action. I don't want anything to do with that at the moment. I think, taking in the highs, flushing back into this lows in here, back through the highs, back into the lows. Now, talk about a manipulated market. Crude oil is one of those markets. They can cut off supply, try to buy it. Demand is high at the moment. If demand, doesn't move too much, demand is going to be sort of constant, then they could just adjust supply to get that price back up again and to manipulate that price. But either way, crude is it's heading higher. It's a bit extended up here. I would expect, if I can see a nice little base, we might get something to buy off into the 90 area. But for now, I just want to wait and see. Not really any price action to show me any love at the moment. Copper's, it's down into this zone here, 432. It had another move down on Friday night. You can see that was most of the session till start of the European session was about here. Got hit right into that support zone. So it's whether it can work its way off that support. Okay, so that's a daily level too, back from here. But daily support zone. Now, if it gets through that, if we get through that, then it's on its way down. But I do expect some sort of reaction back up and off, and maybe see what happens up at this zone. Whoops, it didn't stay there. Up at this zone through here, which is at 438, 38.50. Okay, that area, maybe react up into that level, find some sellers, and we push down through this zone, back down through here, and extend on those losses, potentially back down to 417.90. Okay, but for now, I just expect some chop around this level, so I'm just going to be watching that closely. All right, we've got the bonds, yields, well, they've just opened and got knocked down, but yields eased on Friday night, basically across the board, eased a bit on the 10s, but the short term, you can see that short term was a bit harder. Just opened up and got smacked down a bit. So whether that's just a flush and we bounce, we'll wait and see what happens. It's more of that argy-bargy coming into the US session. Okay, that's the 10 years. They've just opened down a bit weaker as well. Many yields are popped up, but that's probably a bit of a flush of this move here from Friday. And longer term, 30 years, don't worry too much about those, but the same sort of scenario. Right, that's all we're going to look at today, guys. I hope you enjoyed that. And like I said, if you like what you hear, it'd be great if you can leave us a like and help us spread the word. And also feel free to take a look at the website, www.tradethestructure.com. All right, speak to you soon. Bye.